right, ladies and gentlemen. We have given you an unusually luxurious lunch break, so we hope that everyone has had time to get some good food. We thank our friends at the World Bank for feeding us. We will herd everyone quickly back in from the dessert table. A couple of points before we get started formally. The first is, can we get a round of applause for Allison, Olivia, Priyanka, and all of the others who have made this event happen? None of this would have been possible without them, and we are certainly in their debt. Anybody who has learned anything from today's discussions owes them a lot. The next piece I'd like to say is, this is the hardest working panel of the entire thing because they have the after lunch crowd. And the after lunch panel is a really, really tough spot. So we have warned them. They are coming ready for bear, excited to engage with you on a fascinating question, which is, now how we know how this works at a granular level, how do we zoom back and prepare our organizations, our institutions, for the really extraordinary changes that could be on the horizon? And as we get into this, and before I introduce the panelists, I just want to make one quick point at the outset. There's a great historian named Yuval Harari who asked a pretty fundamental question, which is, why do humans run the world? Why are we in charge? He said, you know, if you look at it, it could be jellyfish, it could be orangutans. There's no natural reason why human beings are in charge and run the world. And what he answered when he studied this question is that we do two things that other species don't do. We can cooperate flexibly, and we can cooperate at scale. You find some species that can cooperate flexibly. So wolves or dolphins can cooperate flexibly, but only in small groups. And you find some species that can cooperate at scale, like bees or ants, but we're the only ones who can do both of those things. And because we can do that, it unlocks a lot of possibilities. In order to do that, we need to agree on basic facts. We need to have a base layer of reality that everyone is comfortable with. And once we have that base layer of reality, we're able to say, okay, I don't know every detail of how the airplane works. I don't understand every part of the inspection process that ensured that it was safe to fly, but I have confidence in the inspectors that carried out that work. I have confidence in the machinists that designed the engines and built the engines, and I'm going to get on that plane and fly halfway around the world and know that I'm going to be okay doing that. And that's what enables many of us to come together in events like this. But that ability to form consensus around a common set of facts is absolutely essential. Blockchain is going to supercharge that consensus. And when it does, it is going to pull friction out of all of our systems. Sometimes this is going to be a good thing. Sometimes this is going to be a bad thing. But however you look at it, it's going to be transformational. It's going to change the way our systems and institutions operate. To help us get ahead of that process, we have pulled together some of the smartest people we know. So we're going to start with Dante Disparte. Dante is the CEO of Risk Cooperative, which is an insanely innovative firm that works to manage complex risk solutions around the world. And Dante, I want to ask you to get us rolling here. How do we think about deploying capital and resources in a world where we can manage risks in ways we've never been able to manage them before?
Wow. Well, thank you to Micah, and thank you to the New America Blockchain Trust Accelerator, and of course the World Bank Group for hosting this important conversation. To your point about nature and organization and naturally collaborative, the only other species I've found that is as collaborative are blockchain enthusiasts. So I've had the pleasure to be roped into this community, and in a very short order I've become enthusiastic about it. So I wanted to answer your question with two philosophical points first, and then I'll try to give you a couple of examples in context. The first philosophical point is, if blockchain could not exist without that other foundational technology, the internet, what cannot exist without blockchain? Philosophical question number one. The second one being, is that if the internet augured a world of low friction communication, blockchain augurs a world of low friction value transfer. And that certainly has borne out in the entire conversation today, and the most promising use cases we're seeing, with Bitcoin being the killer app at the moment, are really holding that point true. So I work in probably the most friction-laden aspect of the capital markets and finance there is, which is the insurance industry. We're a $5.5 trillion industry. We're only essential when bad things happen. Otherwise, it's like the CIA. You never.
Sadly, you're essential a lot these days.
Yes, and if I, just to put a fine point on how essential we are, the summer of misfortune that we have had with 3 500-year flooding events in Texas in 3 consecutive years, with Hurricane Irma, the most persistent and powerful Atlantic hurricane system ever recorded, with Maria destroying the island of Puerto Rico, where I'm from. All of these types of complex events start to reach the $500 billion mark in the span of a few months, not even counting the apocalyptic fires we're seeing in California, the earthquake in Mexico, and on and on and on. And so if you want to build a resilient society, the balance sheet that sits on the sidelines, Tamika and I work with the initiative here, Bretton Woods 2, you've got to not only take these long-term asset holders, of which the insurers are often the most efficient at hoarding it, you're not only too big to fail, you're too big to hide. And what stands between reconstruction and households and building resilience is friction, right? So just to drive home a fine point, in Houston, the 4th largest city in the United States, after Hurricane Harvey dropped the most rain we have ever recorded in this country on one location, the claims process for even well-insured households is friction-laden. You need to, number 1, be able to file a claim. Number 2, then a loss adjuster shows up. Number 3, then you debate with that loss adjuster multiple times, and often you'll have to do that several times before you see the first dollar of a claim. And so in the complex world that we live in, where we are socializing losses and privatizing gains, which is kind of the current operating model we see, Equifax drives home that point. In that complex world, friction, frankly, is the enemy of all kinds of things. And the first and foremost one being trust. Lack of trust in every institution on the planet is showing up in our ballot boxes with some profoundly consequential changes, with Brexit being the European answer, and of course the retrenchment of economic nationalism in the United States being incredibly complex. So a foundational technology like blockchain effectively removes many of these barriers, and there are fewer places that could gain as much from it than the insurance industry, but we're also amongst the slowest to move on the planet. So I'm trying to rattle the cage from the inside.
So we're going to have a competition now for arcane bureaucracies. So from the insurance industry to the World Bank, and I say that with great affection for the World Bank, of course. But Susan, you get the lucky task of figuring out how you take one of the most dispersed organizations on the planet, and I think you guys are way up there at the top. There may be a handful that beat you, but not many. And figuring out how you can use distributed ledger technology and blockchain to pull friction out of the task of doing great work around the world. It's not easy, but how are you doing it?
Thank you, Tamika. It's a great introduction for the World Bank Group.
Susan is not inviting me back, unfortunately.
So before I start, I want to thank Alison Price. I coordinated this with her, and she's the most impeccable person when it comes to handling an event, and I can't thank her enough. Under the topic, blockchain in the World Bank Group. Yes, we are a huge organization with many different players, and we're decentralized all over. If you think of everything that people have been talking about this morning, from supply chain to security, de-risking, every one of these use cases impacts us. If we're looking at our organizational structures and what this technology might mean, procurement, the way we hire people, the way that we handle our trust funds, where our money goes, being able to show that we're being responsible. This technology could potentially be a game changer for us. A lot of what we do is ensuring that our funding is going to the right places and ensuring transparency and that we're serving our donor countries and our clients. Adding this layer of transparency makes that job a lot easier. The tricky part that somebody brought up this morning is the behavior part. I liked what I heard in the last session of blockchain's actually the easy part. And I think that's very true. We formed our blockchain lab in June, and we've the excitement has spread throughout the bank. We've talked with a variety of groups in the global practices, but also for internal use cases. And I think what we need to do to prepare for this technology is learn about it, learn what its implications are, knowing that it's not in its final form yet, but to prepare for how it's going to change the way that we work, the way that we communicate with each other, and where our concentrations should be. So we talk about end of friction in a huge bureaucracy and how much time people spend just trying to get something done. Bringing the right people in the room to push something a little bit further, the exchange of information, building on the partnerships. Hopefully a technology like this combined with others can help make that go a little bit easier. And as our CIO, Denny Robitel, also said this morning, this type of technology also encourages partnerships to solve a lot of the problems that we have, and all of these are World Bank use cases as well. We need to partner with organizations. And I think that's the new operating model, is that we need to be more open. We need to partner with other organizations and build on top of what we're doing, because we do have a responsibility to ensure that this technology is utilized in a way that serves everyone.
So one of the organizations that is attempting and succeeding in many instances to deploy blockchain successfully is Consensus. And Consensus was founded by a guy named Joe Lubin, who invented an iteration of blockchain called Ethereum, along with a couple of other folks. But Consensus has been very forward-leaning in building out system-level solutions around the world. And I was chatting with Joe a couple of days ago. He was demoing the technology that you were using to take law and smart contracts and move contracting entirely onto blockchain. You think about the amount of energy that is expended generating the same document over and over and over again in contracting, and how lives would be different and how commerce would be different if all of that were streamlined, if we could just do that with a couple of clicks of a mouse and be done with it. Where does this take us, and what are the projects that you guys are working on that you think could have the biggest impact when it comes to eliminating friction?
Wow, these are big topics. Thank you again to Micah, and also another shout out to Allison, because yeah, I probably wouldn't have figured out how to get my two shoes tied this morning if it weren't for her. So first of all, Consensus is a portfolio company. We build businesses on the Internet of Transactions. And we also are at kind of the forefront of helping to make that a real thing. Company or organizations like the World Bank, who we've been getting to know, are really out in front of this. I had a front row seat, quick aside, to Uber and the like overrunning the ground transit industry, and how that disruption played out. And I can say that the banking industry is, has a few sharper tacks than the taxi industry did, and kind of getting in front of this is really cool to watch, because okay, sometimes we see POC projects that are just sort of, well, we're afraid of blockchain, we're going to figure it out by doing any old project. But a lot of these projects, especially the leadership of the World Bank, have noticed this. They really are thinking thoughtfully about, well, let's do projects where, if it worked out, it'll transform the organization, right? So we do a small thing, but it could become a big thing, as opposed to, oh, trade finance, let's do that, right? Yeah, and I think that's a good lesson for any organization, is to say, when you get in front of this and when you're trying to learn by doing, and learn, but when you're doing, think big, but do small.
So give us one specifically that you're working on that you think may be a game changer. We've heard land titling earlier. We've heard some amazing use cases around conservation and good governance and grant making. What's one that you guys are working on that could redesign an organization?
Well, you mentioned, I think my two favorite, the three projects that really have to succeed at Consensus are our Pegasus project, where we're working on taking the Ethereum protocol and transforming that, learning from all the stuff that's out there right now, Hyperledger Fabric and Sawtooth and other protocols, and saying, look, let's get past that. Let's get to a post-protocol period where we're talking about public or private transactions, not public or private networks, when we talk about friction-free, we're going to have a lot of friction if you're in a supply chain network out of Detroit and you're in a tire rubber provenance network trying to keep conflict rubber out of your tires, and you're also part of the supply chain for the automotive industry, but you've been building these networks separately, and now you've got the same problem we've always had, right, when they come smashing together. So we need to be able to have an internet of transactions, not a bunch of internet of transactions, and we need to get there. So that project needs to happen. Uport, which I described at the State Department thing the other day, but then, yeah, open law. A lot of people think of blockchain as immutable data. What it really is immutable rules, and between legally separate entities where those parties are afraid of each other becoming the hegemon of the system. Right? That's really, it solves one problem. Blockchain doesn't solve a technical problem. It solves a social problem that says, you can't have control of the system and I can't have control of the system through which we're doing business. We can't change the rules on each other. So open law allows any company to do a bilateral or multilateral contract with each other, or do a regulation. Like the government could just start writing regulations onto the blockchain and saying, hey, would you like a colonoscopy every month, or would you like to run your transactions through this rails? Right.
If that's the only choice, then we may need to start with a slightly more appealing set of options. But Mike, you spend a lot of time perched at the very pinnacle of the ivory tower at MIT, and you've literally written the book on this. You see off into the distance and you see where this is headed. Where are we going here, and what are the implications for society when, as John was saying a moment ago, systems run systems? Because this is uncharted territory. We haven't tried this before.
Thanks to Micah. Yeah, and just seeing into the distance doesn't mean that I've got very clear vision of what that is, by the way. It could be, some tidal wave that I think is an angel. And also thanks again to the New America Foundation, to the World Bank. It's great to come down here. The reason why you might notice that one of my socks is not matching the other one is because I was up at 5 and couldn't see what I was doing this morning to get on the flight to get down here in time to be here. So I'm thrilled to be here. Just a panel's always a place to expose your wardrobe malfunctions. In any case, with that aside,
there's no blockchain for that yet.
There's not yet, yeah. But going from that sort of very small focus to the bigger one you want me to look at, I think it's worth sort of taking the word friction and trying to sort of break that down, right? In reality, technology has always been breaking friction. We're always in this ongoing process. The wheel was literally the invention of something to resolve the problem of friction, right? So we're always in this process. So I don't think we're ever going to end it. That's one thing. But I think we are accelerating the process by which we innovate. And how are we doing that? Well, you talked about Yuval Harari's stuff, and I've heard you say this before, and I told you this. I've stolen that little speech of yours and put it in the forthcoming book.
I need to trademark it.
Because I think it's actually brilliant, and that is collaboration is exactly what this is all about. And the beauty of the blockchain is that it allows us to resolve this mission that is really the defining feature of humanity. That is, we collaborate. We formed tribes, then we formed settlements, then we formed villages, then we formed, states, nations, and then the world through the act of economic exchange, through the act of collaboration, through the act of cooperation. That's what happens. But we've always had this one fundamental source of friction in that exercise, which is trust. So trust is the core problem, and we've resolved it historically through these centralized institutions. But we've all come to realize, and this is anybody who's sitting at in this group here will understand that this is what we're all about. These institutions centralize that trust, and they become the source of friction. They also become wealthy and powerful, and they are also the biggest challenge we face, right? So this is a political exercise. And then people say, blockchain's the easy bit, the hard bit is the governance. And that governance comes down to who is going to get disrupted, who's going to get disintermediated. I actually think that the World Bank and other multilateral institutions are very well placed to do this. It's kind of funny because the Bitcoin community go, oh my God, you could never imagine a worse institution because it's government, it's centralized control and everything else. The reality is you exist above all of these centralized institutions and have the capacity, if you get it right, to be able to set a standard that basically herds all the cats together and gets them to come together and collaborate, which is what we have to do. Or you could get it wrong, because there are very close relationships between the shareholders of the World Bank, who have often very close ties to the centralized institutions, be they banks or public utilities or whoever, and all these places, who may well get in the way of what we're trying to do. So clear focus on what do we mean by friction, where does it happen, how do we get rid of it, and who are the disintermediated parties, and how do we make the case that that disintermediation is worthwhile for society is a key point here. But if we do that, the possibilities are incredible. I like the fact that Dante talked about, what sort of models could we imagine that couldn't exist without the blockchain. And I think that's actually one of the most exciting places to go with this, because then we start to say, I think when people talk about supply chains, they say, I want my supply chain with my 10 member companies to get more efficiency around the provenance and so forth. The bigger question is, like, what about if we just create this incredibly fluid open situation in which suppliers from anywhere can plug in because they've all been pre-certified and we've got trusted knowledge about their background. And now we have this capacity to onboard people everywhere rapidly. We've got Internet of Things environments where devices can now we imagine this IoT world as being this wonderful data-rich environment, but how are we going to trust our automated cars to sort of share and transact with each other and build this vision that we have if we can't figure out how they can trust each other? Because you can't put a bank in the middle of two cars from anywhere. You can't put GM or Ford, to your point about nobody wants the hegemon to run the world in these environments. And so the capacity to actually empower the node itself, be it the car, the individual, the farmer, and have them interact with their assets is sort of mind-blowing. This is the collaborative exercise is broad and diverse, if that's the case.
And I think the question that I have, and I don't know the answer on this one yet, but hopefully you guys do, because you're smarter than I am, is does this lead to the devolution of power or the dissolution of power? Because if you devolve power, if we're just sending power down a level, that's pretty straightforward, and we've done that many times before in the course of human history. If we're dissolving power, if we're actually taking power and transferring it over to entities that are really beyond anybody's ability to control them or shape them, that's even more disruptive than what we have seen to date. And I don't know if anybody has thoughts on that yet, but I think it's a compelling question that we will have to wrestle with. Susan?
So I could start with that one. I think instead of talking about dissolution of power, dissemination, how about we just talk about empowerment? So this is a
branding on that is much better, sir.
So this is a technology where actually the most compelling use cases and implementations at this point are in places that need it most. They're in our third world countries, developing countries, where there are services that are missing. So you find the most innovation where there's a vacuum and where people need things. And that's where you see the most compelling stories come from. This is a technology that can empower people, and new business models will form. If we just phrase it of looking at power structures disintegrating, I think it makes it a lot more difficult to put in place things that we'd like. If we look at it from the approach of we're giving people tools to create a life for themselves and to start a business, to transact, then we're going to get a lot more support.
Yeah, and if I could add to that, nothing has made a better case for digital identity than the Equifax breach, right? That when you live in a digital world and yet you rely on analog models, and you have something occur of this scale where 143 million personally identifiable records, what we call in the cybersecurity arena the crown jewels, that is nearly the entire size of the US workforce. And so the analog model of a social security number and a piece of paper and a centralized database and a registry, if you just envision a world in which something like blockchain were in place, you could still in theory have the existence of an Equifax, but it's not creating an Achilles heel by putting all of that information in a centralized location. And so in the context of failures, do you realize where the opportunities are in the advanced economies? But I completely agree that the biggest upside of this and the markets that will leapfrog into this future are the emerging and developing markets. They're in so many ways not encumbered by legacy systems the same way that we are here.
John, help us out on this, because I think that what we are seeing is a range of different options, and I would be thrilled, as I'm sure most folks in this room would, if we did not have to rely on credit monitoring bureaus to safeguard our data in the way that we have in the past. But technically, what are the intermediate steps that are going to be required to get us to that world? And is this something that happens in 3 years? Is this something that happens in 10 years? Is this something that happens when my grandchildren are coming out of college?
Yes. Gibson's right? The future is here. It's unevenly distributed. And I love what you said, because I think that's right. This is one of those technology. What did I say the other day? It was, it's not a hammer, it's a telescope, right? It was a way for us to think differently and see differently rather than just go around hammering nails. But where there are nails, the big nails are in the developing world. The nice thing about this, just like the internet, is that the same that it's a global wave where the thing that's going to solve for child's identity in an African state where we don't trust, or they don't trust their government to keep records reliably, to give that child identity and for there to be provenance on their education, that's a great use case, and it's happening today. And that's, so, say today, that's happening today. Right now, there are a variety of projects. We do some, there's others. I won't speak for the other companies I know about, that are doing that, and that's happening right now. And then cities like Zug, Switzerland, they're putting their identity, their registrars on the blockchain using Uport, one of our companies, and that's happening this month. And then slightly farther in the future, is into the 2018 timeframe, you're going to have identity vaults starting to show up, where I can go and say I'm a young person and I'm going into or I'm trying to buy alcohol. The person who I'm buying the alcohol from, what am I doing right now? They're seeing my driver's license. Well, maybe they can show up at my house later on, right? Not so good. But if I'm shipping that, FedEx needs to know my address. They don't need to know I'm over 21. The person I'm buying the alcohol from needs to know I'm over 21. They need attestation of that, but they don't need to know my address, right? So what's cool about this is that these public networks, and I'm going to make a prediction that large organizations, banks, governments will insist on public networks being part of their even highly private solutions, because it's the only way to actually secure them. Now that's, this panel, you got to wrap your head around that, but let me predict that we will do very, very private things, and the public network will be part of how that works. Even though right now I think a lot of us think of the public network as this thing where we're all running around naked and it's a nudist colony. And in truth,
that's called Equifax.
That's different. Right. Once you get through the barbed wire fence, you're in the yeah exactly. So I'll stop. But I think that's an important change.
So let's ask quickly, because we do want to get to questions. If there is one thing that each of you could suggest that the organizations in the room, and we have an amazing cross-section of organizations in the room, do to start getting ahead of this wave, what is that? What is the change that they should be making today in order to prepare for the changes that we're talking about in 2018 and 2025?
Well, the first is just educate, build, and re-educate. Like, just constantly try to distill information as broadly as possible so that you have these networks. I think one of the concerns we face is that there's a concentration of talent in the blockchain space, and that is great. They're typically passionate, driven people. John knows a lot of them, but that in itself is yet an insufficiently decentralized model. There is the risk that the algorithm itself embeds the values of this core group of developers, and the rest of us are beholden to that. It doesn't have to be nefarious, but that in itself is not sufficiently decentralized as a concept. So the more people get involved, the more education, the more investment there is in actually developing talent, the better we're all going to be. That's the first point. The other one I just want to say is that when we're approaching pilots and things like that, think about what the business model is. Where is the money to be made, right? Because these are this concept is inherently a privately driven thing. On the other hand, it is the public, everyone's naked, architecture that has all of this collaborative stuff going on. Somebody's going to try to figure out how to make money of it. Otherwise, it won't happen, right? You're not going to have resources deployed unless there is some way to extract rents from it. I like to think that we're going to have this cycle of, new capitalist models, new monopolies emerging, and then we're just going to destroy them, and then they come back and come back. But if we don't think about which Uber is going to come along and try to capitalize on this structure, then we're just going to build a system that looks a little bit like a collectivist farm that doesn't make anything, right? So it's got to be, the private sector mentality, the entrepreneurial mentality needs to be there, and it has to be, what are we going to build that actually makes money, and who's the player that's actually going to act like they want to be the king titan in this, even if they'll be cut down at some point in the future.
Yeah, if I may say, that's the big question mark that nobody has an answer to is, how do we incent innovation in new ways in this new system if it is true that rent-seeking behaviors become more difficult because now I can't do a centralized system like an Uber and charge super rents for that thing. Because it's blockchain. There's just going to be so many other alternatives instantly. But that did happen with the internet as well. And we did kind of figure that out. So I have faith that we'll figure out where the incentives come, but they will be different.
Just
My bumper sticker.
One quick last point, because the token model is very interesting in this, right? So the idea that now, we've had this discussion around what Ethereum achieved, which is to say you incentivized developers to build something that was inherently open sourced. It was that now you're rewarding institutions to build an open platform rather than a closed one that they can extract rents from. That's a profoundly different idea, because now we can actually, and the rents come through a different mechanism. They come through effectively creating, the SEC wouldn't like me to say this, or at least ICOs wouldn't, but it is a form of equity. It's an equity of some sort in the system, and you are going to be sharing in the value of the rise of that network. So you're incentivized to build networks, not closed systems. That's a money-making exercise, but it's a very different way of approaching where you get your money from.
I hear regulators coming off the elevator right now as Michael is saying this.
Conceptual concept of it.
I think the bumper sticker that I have often thought of getting printed up on this is that if you thrive on efficiency and transparency and accountability, blockchain is going to be the best thing that ever happened to your organization. If you thrive on friction, and there are a lot of great organizations that do, that's where we make a lot of our money in society, then you need to be pretty concerned, because this is going to change things. Susan, what do you think?
No, I agree. Education is a huge part. Understanding the capabilities and the limitations of the technology at this point to ready your organization for changes to your business models. I think experimentation is important, and I think as people get more used to the idea of it and understand what's coming, because it is, you can avoid it, but it's going to hit you then, so you're better off preparing. But I think if people think of it, try to look at it as what sort of mundane tasks could this potentially take away, and what opportunities can it open up. So there's going to be a lot of scared people and a lot of excited people. And I think the excited people need to help those that are scared through education and talking about opportunities that could open. And we don't even know what all of those are. So it's a lot easier to talk about all the jobs that are going to leave and all of the disruption and the negative parts. But nobody's thought of these business models that you've talked about, that's a little bit more difficult to see how things are going to change in the future and what sort of possibilities those are opening.
Dante, you get to be our final oracle of risk and opportunity here. What should we worry about?
Turns out that's what I do by day. I sit around and prognosticate about all kinds of terrible things. One quick prediction is that we're going to solve for Michael's socks, and blockchain may be involved one way or another. Second quick prediction is that you're not likely to print that bumper sticker. It's a little too long. So ask a box retailer pre-internet and pre-e-commerce how comfortable they were, and then fast forward to today. Ask Jamie Dimon, ask JP Morgan, ask centralized financial institutions how comfortable they are, and then fast forward a decade from today. the end of friction is coming. It doesn't necessarily have to be painful, but the people who thrive in darkness have, frankly, the most to lose, right? Both from a political point of view, an institutional point of view. And I'm willing to predict that we should go long on where this technology takes the world, because fundamentally, it harnesses something we all want at an individual level, which is trust. We're at the lowest point in history in lack of trust in institutions. And here we have a technology that could not just disrupt, but augment and replace the current standards of opacity and entrenched and friction that drives everything we do in our lives, and has not only left millions and billions of people marginalized on the sidelines, all of that uncertainty is coming home to roost. You can't build Fortress America in an interconnected global economy like the one we have today. And so the only way we can get back to resolving for this trust is to begin pre-investing in stability.
So with that as our amazing on-ramp to your questions, let's take 3 questions, and then we will see how many more we have time for. Right here, if we can get a microphone for Fenny. Hopefully we have microphones. Yes, no? Go ahead and stand up and yell loud.
While we're doing that, I've got a question for Dante. Real
Here
quick.
come our microphones.
I got a real quick question for Dante.
Oh, please.
Talking about Puerto Rico, I mean, is this not an opportunity? Would an audacious play to say, let's rebuild the Puerto Rican economy and let's do the Puerto Rican ICO?
You see the grin on Dante's face.
And by the way, that was not planted. Born and raised in Puerto Rico, my family are on the island. You've seen nothing short of the complete collapse of the infrastructure, the electricity grid, the banking system, the hospital system. Last week I had an event at the American Security Project calling for this narrative of Build Back Better. And out of this wreckage, you could genuinely build the Singapore of the Caribbean. So there's an enormous opportunity. I'm willing to play the ambassadorial role to anybody, anywhere in the world. We have a blockchain technology company, Power Ledger, out of Australia that we're partnering with to build certain pilots in the Caribbean. So enormous, enormous opportunity to build back better and get it right.
That does fit on a bumper sticker, I will note. Fenny, please.
I'm going to apologize for being a bit of a rabble-rouser here. I want to interrogate some of the exuberance that I've heard from the panel with 2 thoughts, or 2 questions. The first question is, aren't we creating new forms of friction? So if we take this smart contract example, legal institutions are much bigger than just a contract, much less a contract that can be encoded in a smart contract format, right? Primarily the operative clauses of a contract, but not necessarily the totality of that contractual relationship. So you've created a new friction now between what we call wet code, which is the legal, real world, legal syntax versus code, or dry code. So that's one friction that I see, so one thought. And the second point I want to make is about what Tamika referred to as dissolution of power. It's a fact that we have created new oligarchs in the blockchain space. Consensus has a lot of power in this space. It does.
Not as much as we want, though.
But it has a lot of
That
power.
may be part of the problem.
You know? I mean, bit theory.
Don't tell Joe I said that, please.
But bit theory has a lot of power. The institutions represented in this room have a lot of power. You can have a distributed technology, but there is still structural concentration of power in this industry. So 2 thoughts out there. Love to hear your
Great
thoughts.
questions. Great questions. Please, Will.
Thanks. So the future of blockchain is one of the greatest opportunities for the application of creativity, perhaps ever. But I'm pretty sure that there's one thing that's going to exceed that, and that is the need for creative thinking about the unanticipated impacts. Like if you are, if you have land tenure, great. If you're capable of swiping left and giving it to somebody else, that's an opportunity for new impacts. And that's just something I can think of right now, and that didn't take a lot of creativity, but how do we stay ahead of all the unanticipated pieces as well, both in terms of creative thinking as well as the governance or safeguards that lets us deal with them very quickly rather than waiting till the worst impacts come?
These are such easy questions. All right, we've got time for one more. Down over here, please.
Hi, Philip Ilevsky with World Bank Deck. So this morning we heard a lot about the potential and all the different where blockchain can be applied, from fisheries to voting to government budgets. Now, naturally, there are some costs associated with it, being from processing power, memory, electricity costs. How do you see some way of incentivizing people to contribute to these? And given that these costs exist, you would see some emergence of a price, which would make some of these ideas feasible and some not. So which ones do you think would be the ones that would emerge and succeed from blockchain? Thanks.
My oh my, panel. You have your work cut out for you.
I'll take a swing at the last one first. But kudos. Those were great questions, all three of you. The energy thing. Satoshi Nakamoto was the beginning of history, not the end of history. Don't associate blockchain too tightly with the notion of proof of work and that sort of thing. We're moving beyond that today, proof of stake, but beyond proof of stake. So these aren't going to be things we're going to worry about in the future. And
John will be arm wrestling with Bitfury about this afterwards. Go ahead.
Sure. I mean, you could also say that proof of work may even become less, consumptive of energy if we move to ASIC resistant type models and so forth, which also upset Bitfury. So I need to be careful. But I want to pick up on those two questions because they're actually, I think, somewhat related. I mean, the second question of yours, Fanny, and Will's as well, and that is, I think a very real concern is this concentration of power, and it is an inherent. That's what I was getting at before. It's an inherent process of the economic reality in which we live. Institutions seek power. That's how you make money. What you want is an architecture that is consistently pushing back against that. Right. So we need to be very focused on open source, open access, again, education, all this these broad concepts of diversity, open access, networking. It also comes down to proof of work, not concentrated mining, but diverse mining. All of that works against the capacity to become the next Google or Amazon, right? And I think that we need to be, and then institutions like the World Bank, anyone that has a connection to the policy layer, and it doesn't mean that there's necessarily regulation, but it means making powerful decisions about which networks you work with, who you procure from, what your policy standard is. All of that needs to be towards open access, open networks, open. That helps us resolve that. It's not to say it won't happen, but if you can create that network, you get this cycle. And in a way, that's answering your question, Will. I think that if we want to sort of worry about what the threats are, it comes down to who's going to exploit this model and what will they be. So it could be, again, the unforeseen biases that get embedded into algorithms. And this happens in all forms of technology, right? We know that AI has this racial bias. There's facial recognition technology that doesn't recognize black faces. And not because somebody intentionally built one that was white person friendly, but because the mistakes that people make when they build technologies. The same would go for a bunch of crypto guys are a very narrow subset of humanity, and they have a certain mindset that doesn't necessarily reflect everything. So
them a lot of credit for the humanity.
I don't want to be ruled by Peter Todd.
Dante, and then we'll give Susan the last word.
So I guess my first inclination was to query how lax is security at New America that a rabble-rouser got in. But I think you both raise really critical points. If the carbon-hungry robber barons of the industrial age inadvertently created climate change, and if the tech titans of the tech age have inadvertently created systemic cyber risk, the blockchain billionaires will, of course, inherently create some other big externality that is hard to contemplate today. So, I mean, I try to take this, not overly optimistic, utopic view of this technology, but just to be realistic about it, that it is here to stay. It's not going away. You're not going to wish it away. And, of course, there will be a concentration of power around it. It's how do the incumbent established players adjust to its arrival is the risk that I'm trying to highlight, right? So I take my 330-year-old industry and I'm trying to rattle the cage from within. And I'll tell you, everybody I talk to is slow to understand it, is slow to appreciate the business model implications. And I treat it more like an augmenting technology than a disrupting one. But it's not going away.
Susan, take us home.
And then mic drop.
So you're right. There might be unintended consequences. It might create additional friction. One way to mediate some of it might be just to take a look at the opportunities and the problems we're trying to resolve and the technology from a multidisciplinary approach. So the technology industry tries to resolve one process, or a development expert might be looking at it from their one point of view. We need to intermix the point of views together and get as many people focused on what this is going to do in the future as we can, so that we can try to identify some of the big risks that could happen and see how we can steer the technology and its usage in ways that hopefully will bring the benefit to most.
It's been said that innovation occurs at the intersection, or really the collision point of ideas. And if we think in those terms, then this was like maybe the most spectacular car crash ever, because just an amazing, amazing density of new ideas and new insights. Thanks to all of you. That was marvelous. Please join me in giving our panelists a round of applause. And we are almost, thank you. We are almost done. This is the part of the day where you get to make commitments, and we all get to make commitments. And what we're going to ask is, we know that a number of organizations have been thinking hard about how we can work together, how we can help shape the evolution of this technology in ways that will solve some of the problems that we're talking about today. And Stella and Jamie, if you can come on up and help kick this off and get us started.